And US stocks with M+ Global. First, you have to open an online trading account. It only takes 5 minutes to complete. Make sure to prepare your IC, bank account statement, and relevant documents. Launch the M+ Global app and enter your email or mobile number to register. Proceed to log in and choose Open Account. Select Market, Account Type, and fill in the required information. Then proceed to face verification and input your signature. Once that is done, your account registration is successful. Now, it is time to deposit funds into your account to start purchasing shares. With M+ Global, there is no need to exchange your cash deposits for foreign currency, and there is no transaction fees. Click Deposit and choose Online FPX to deposit quickly. It only takes 5 minutes to complete. Once the funds have been confirmed and submitted, the next page will indicate a successful deposit. If the transaction is indicated as under reviewing, kindly provide the additional details required. Once you have made your deposit, it's time to pick the stocks you would like to trade. Click Market and select the Hong Kong or US stock market. You can choose from over 10,000 stocks. Tap Sectors to view the best performing categories. Tap Top Stocks to filter stocks according to their percentage change in price. Tap Most Active to sort by volume and turnover. Found a stock you're interested in? Add it to your favorites immediately. You can also add to your watch list so you can check it anytime. Use the Edit function to add or delete your selected stocks. Create groups to organize your stocks via drag and drop function. Stay on top of the market with M+ Global's real-time market data. Now, it's time to start trading. You can search directly by the stock name or code. Choose whether to sell or buy. Click Order Type and select Market to buy or sell at current market price. Or select Limit to choose your price. Enter the share quantity and other information, then submit the order. How to check if your order has been executed? Just click on Trade Orders to check. If you want to modify the transaction price, just click on today's order to change it. Congratulations! You're now the proud owner of your first Hong Kong or US stock. Don't forget to subscribe to our YouTube channel.
M+ Global, winning the world.
The electric vehicle industry is now the talk of the town. Start trading EV stocks now with M+ Global. Driving an EV is no longer an unattainable dream, and in the future, the EV industry will be one of the fastest growing industries in the world. Many EV brands have also started to appear in Malaysia. Brands such as BYD, BMW, and Tesla have all entered the Malaysian market.
Electric vehicles are not just vehicles. They have the ability to shape the lives of all Malaysians. With smart mobile living spaces and autonomous and comfortable driving experiences, this technological revolution will bring immense potential to the Malaysian market.
Driven by policies and growing demand, the EV market has plenty of potential. So how do you, as a Malaysian investor, seize this once-in-a-lifetime opportunity to invest in EV stocks? Let's use the US stock Tesla as an example. First, enter the stock code TSLA or the stock name Tesla. Once you enter the stock details page, you will be able to see the live stock price. You can also view basic stock information such as market capitalization and technical trends. You can customize the time range for the share price movements from 1 day to 5 years, and even from the company's listing date up until now. From this chart, you can see that Tesla's share price has continued to rise from $21.80 to $182 per share over the past 5 years. It has risen more than 7 times during this period, far outperforming the broad market average. There is a wide range of stock analysis tools available to help you make a more comprehensive analysis, such as capital flows, the latest updates, and various fundamental indicators. This includes ROE, earnings performance, net profit margin, assets and liabilities data, and cash flow, and more to help you stay up to date with the latest company news. If you want to trade a stock, click Trade and enter the number of shares. Then click Buy or Sell to place your order. An order has been submitted message will be displayed once the order has been placed. When the order is matched, the transaction is now complete. With M Plus Global, you can trade a variety of EV stocks in the US and Hong Kong stock markets, as well as diversified investment vehicles such as ETFs to help you better allocate your investments. There is also an information section. Click on Top News to stay informed with the latest investment trends at all times. Identifying investment opportunities is just the first step, but choosing a good trading platform is winning half the battle. Open an account with M Plus Global today and take control of all your global investments right at your fingertips.
To see more videos from M Plus Global, subscribe to our YouTube channel today.
M Plus Global, winning the world.
Hello, good evening, everyone. Welcome to today's M Plus Global live stream. We are so glad you can be joining us today because we have really exciting program lined up for you. So before we start, let me introduce myself. So I'm Hui Yi from M Plus Online Research Team. So I'm delighted to be your host today. So have you guys had your dinner? Hi, William. Hello, good evening, Miracle Lau. Yeah, thanks for joining. So we will do this live stream every weekday from 9 to 11 a.m. and also 7 to 9 p.m. So if you had your dinner, or I don't know, maybe you tapao your dinner or you have your dinner on hand. Hi, Lai Meng. Hi. Yeah, hello. Yeah, you can just grab your dinner and then sit back and relax with us tonight. Yes. And then, so what we have for today, we are so privileged that to have our head of research, Loui Low, with us today, who has over a decade of equity research experience to share with us his insight on like some of the stocks to trade on the US stock market during the earnings season. So, and also towards the end of the session, we have really amazing prize for you. And it's really simple to win. You just have to answer our questions by just comment on the comment section below, and then you can stand a chance to win the prize. So what we have for the prize, for those who joined us before, maybe you know. For those who are new to us, maybe we have cash, trading cash, or could be free shares. Yeah, I don't know. So stay tuned with us and then you will know. So before that, remember global apps. Yeah, it's you can scan the QR code over here to download our M Plus Global apps. Yeah, because you will need it when you want to answer the questions and then win the prize. Yes. And then if you have any questions or feedback, just feel free to comment on the section below. We will try our best to address your concerns. Yes, and then, so without further ado, let's welcome our head of research, Loui Low. Yeah, so stay tuned with us. We'll play a video first, and then we'll welcome our head of research, Loui Low, to share with us his insights.
How to buy Hong Kong and US stocks with M Plus Global. First, you have to open an online trading account. It only takes 5 minutes to complete. Make sure to prepare your IC, bank account statement, and relevant documents. Launch the M Plus Global app and enter your email or mobile number to register. Proceed to log in and choose Open Account. Select Market, Account Type, and fill in the required information. Then proceed to face verification and input your signature. Once that is done, your account registration is successful. Now, it is time to deposit funds into your account to start purchasing shares. With M Plus Global, there is no need to exchange your cash deposits for foreign currency, and there is no transaction fees. Click Deposit and choose Online FPX to deposit quickly. It only takes 5 minutes to complete. Once the funds have been confirmed and submitted, the next page will indicate a successful deposit. If the transaction is indicated as under reviewing, kindly provide the additional details required. Once you have made your deposit, it's time to pick the stocks you would like to trade. Click Market and select the Hong Kong or US stock market. You can choose from over 10,000 stocks. Tap Sectors to view the best performing categories. Tap Top Stocks to filter stocks according to their percentage change in price. Tap Most Active to sort by volume and turnover. Found a stock you're interested in? Add it to your favorites immediately. You can also add to your watch list so you can check it anytime. Use the edit function to add or delete your selected stocks. Create groups to organize your stocks via drag and drop function. Stay on top of the market with M Plus Global's real-time market data. Now it's time to start trading. You can search directly by the stock name or code. Choose whether to sell or buy, click order type and select market to buy or sell at current market price, or select limit to choose your price. Enter the share quantity and other information, then submit the order. How to check if your order has been executed? Just click on Trade Orders to check. If you want to modify the transaction price, just click on today's order to change it. Congratulations! You're now the proud owner of your first Hong Kong or US stock. Don't forget to subscribe to our YouTube channel.
M Plus Global, winning the world.
So, welcome back to M Plus Global live stream. And today, myself, Loui Low, will be sharing with you some updates about the stock market, especially, during this earnings season, there are a lot of things that we have to, take care of. And so we are here to give you some updates so that you can stay connected with the stock markets. And especially right now, we are heading into the full-blown, reporting season. And also the FOMC meeting is also around the corner. I would say that is also a very important event that everyone watch out for. So let's do some updates, because last week we did mention about gold, and also crude oil prices and how does it affect the stock market. So this week again, I will do some updates about the stocks indices. Especially right now, we understand that the markets has not been moving. Over the past week, the S&P 500, the Nasdaq, the Dow Jones actually fluctuating in a very narrow range. So what sort of expectation that we can look for in the next 2 days, 2 trading days? Especially today, we have some of the earnings coming out, like TSMC has came out with results within expectation, and also some of the airlines that is coming out with results as well. So those are the things that we are really interested to know about what sort of growth they have, especially after the recovery, after the reopening of all the borders from international until China. So all of that will actually contribute to potentially some growth factor in the stock markets or in the companies, which may translate to stock markets movements going forward. Okay, so generally, you can see that the stocks has been moving just sideways over the past week on Nasdaq. Nasdaq is still the one leading. And secondly, we have S&P 500. S&P 500 is also considered as trading a very narrow range. And you can also see that Hang Seng has dropped a little bit. Dow Jones is moving sideways. And Hang Seng Tech has been also coming off over the past 1 week period. And Bursa Technology and also FBM KLCR is on the way down as well. So basically, we don't see a lot of huge impetus in the market. We don't see a lot of movements in the market. I think it is because of this earnings season. Everyone is watching how is the corporate earnings is performing, especially during this period of time. It's definitely very different from what we have seen in the past years. Why do I say so? It's because over the years, we are actually within a very comfort zone, a very smooth zero interest rate policy kind of environment. But what is the impact after a few rounds or few cycles of interest rate hike? What sort of expectation the traders or the investors has to put into all these corporate earnings? So that is actually a wild card towards the earnings. So that is why this earnings season going forward will be determining what is going to be the idea, the whole idea under this kind of environment, what sort of expectation we should be putting in for the next coming few quarters. Okay, so for gold prices, we understand that last week itself, we are still having a very good time because gold prices has been surging higher and higher. But this week, it has been just hovering around the $2,000 level. It has not been moving above that 2,000 key psychological level. That is a good sign. But if they are going into that territory again, then you know what to do, right? Because last week, we did mention based on the gold prices, if it is heading higher, you can always look for ETFs, which is related to gold, which is GLD, yeah? So gold prices is one of the determining factor, or people would want to flock into this instrument. Why do they want to flock into this instrument? It's because this could be considered as a safe haven asset. And during these bad times, or even during when the economic activity is slowing down, contracting, then perhaps investors may want to look into safe haven assets. So that's why gold is the place to be when economic activities is on the way down or declining or contracting. Okay, contractionary mode, people are looking for safe haven asset. So if this is coming off, which means that it is a good sign because recession may be not there. We might not fall into the recession phase, but again, this could be an opportunity for you because gold prices surging above 2,000 psychological level definitely will bring some opportunities to trade within the gold-related counters, okay, or gold-related ETFs. Okay, next, crude oil price. So last week we did mention about crude oil price being affected by the OPEC Plus surprise move, right? They surprise the market by having a production cut in terms of their production or oil production, and that has given a spike from 76 towards 85, or I think 80 plus, above 80 level, and towards 83 US dollar mark. This is a WTI crude oil, by the way. Okay, so given that scenario, OPEC Plus has actually has done the production cut and the oil spike. But what happened after that is, you can see on the chart, it is actually falling back from 83 towards the 77. So are they pricing in different kind of, different set of factors into this WTI crude oil? Are they factoring a potential recession? Is that what they are trying to do right now? So the question is, are we heading into a recession? So that is a very, very important question, whether we are heading into recession. Is this a sign, is this falling or pullback of the crude oil prices a sign of a sign for our investors community to say that, traders are looking at a pullback in terms of the crude oil prices? Are they speculating that we are going into a recession? So these are some of the thoughts, when things happen, when pullback happens or when a spike in the oil price happens, normally we will try to find what sort of factors they are actually pricing in. So in this scenario, is a pullback from 83 to 77 a sign for recession fear? So that is what I want to point out here. Okay. So another move from the US 10-year bond yield is actually on the way up. And normally this is telling us that, when bond traders are speculating, the yields are actually going up. It means that perhaps the bond traders are also speculating that the FOMC meeting could be on a more hawkish tone. So these are some of the three things that I want to point out to you today, is because that we are heading to FOMC meeting, and if the FOMC meeting will come with a 25 basis point increase in interest rate, that is sort of like within expectation, because in Bloomberg consensus, as we have shown last week, the consensus said that, suggesting that the Federal Reserve will be on a potential 25 basis point interest rate hike at this current moment. So that could be, sort of hawkish or less hawkish than the previous meeting. But again, consensus is also looking at the future direction of the interest rate hike might be on the way down. Okay, so they are expecting a rate cut this year. But to me, I would say that the rate cut wouldn't happen this year, and it may happen only in 2024. So let's monitor what is going to happen in the upcoming Federal Reserve meeting. Okay, so my expectation is that the Federal Reserve may pause after this round of increased incremental of 25 basis point in the May meeting. But the rest of the year, they might stay put on the, they might not go hawkish or they might not go dovish, but they'll stay, as normal, as put it a pause towards the interest rate cycle and wait for a few more data. So another thing that when we look at some of this data that we have mentioned last week, we did mention about when there is a rate cut, is actually very detrimental towards the stock market. Why is it so? It's because that might be a prelude towards potential slowdown in economic activities. So that is why right now, if they are having a pause in terms of the interest rate direction, is good enough. But if there is a rate cut, they might be anticipating recession to be coming later stage. So that's why if the data is showing to the Fed to say that yes, there might be some slowdown in economic activities and they might want to do a rate cut, the rate cut might be also a sign for you to reduce your exposure. That is a general rule of thumb to say that, overall, this might be the Federal Reserve might be at the tipping point of not going higher anymore on the interest rate, but it might not go down. It might just stay flat for some time, and I think the rate cut will come in perhaps in next year. Okay, and today and tomorrow is the U.S. has some of the events or some of the economic indicators that we always will monitor, although it's not very important to the Federal Reserve, but again, they might make headlines. Why do I say so? Is because when initial jobless claims, jobless claims is higher, is not so good for the economic activity, and they might amplify this to say that, jobless claim is higher than expected, perhaps is signs of slowing downs in things in the US and things like that. So these are some of the negative factors that perhaps people or the media might amplify, and that will affect the stock market's direction. Other than that, we also heard a lot about the home sales related to mortgage, because mortgage right now they have to pay higher interest rate. So that is why mortgage related or home sales related, that is also one big chunk that people will monitor as well. Means that when property market is doing not so good, and they might amplify this, and the market might go into negative mode, at least for a near term. So some of these indicators is very important because it is starting to get more interesting because after all these CPI numbers, PPI numbers that has been in the media for the past one year period, right now the direction might be driven by new factors, which is maybe home sales. People are talking about 2008 this property bubble might come in again, and they might not be able to pay this mortgage because the interest rate has been going up higher and higher over the past few rounds, right? So that is why I think this might be a new topic for the media to take up and also amplify it. So there might be something to look at from these indicators. And tomorrow we have this S&P Global US Manufacturing PMI. And if it is below 50, it is called sort of a contractionary period. If it is above 50, it is expansionary indicator. So PMI is also very important to take note of whether the business is actually moving on expansionary mode or contractionary mode. So I think these are some of the key events or key data that people will look at. So I would say that it is not the main data that the Federal Reserve is looking at, but it's worthwhile looking at it because we will know more about whether people are really pricing in, whether home sales, whether mortgage, are they able to repay mortgage? Those things may come up to be very important in the near term. Okay. So after that, we will talk about earnings surprises. Earnings surprises right now is still maybe too early, but certainly these 62 companies that has reported their financial announcement has given us some good chances to say that this is not too bad after all, because over 75% of the 62 corporates beats the estimates. So overall, out of this 62, although it's still very small sample, because out of 62, it's about 10 to 12% of companies that has been reporting their financial results over in the S&P 500 shows that they can actually beat the estimate. So I wouldn't be too it is good that they beat the consensus. But again, if you come back to understand how they build this model, is that analysts has to slash the earnings for the next. If the company is registering a slower earnings, then they will slash for the next upcoming few quarters of earnings. And therefore, if they slash too much, then it is easy for the companies to actually beat the consensus. So it might be that case, that scenario, whereby over the past few quarters, it has been on the way down in terms of their earnings of S&P 500 companies, and therefore the analysts have slashed too much that led to an earnings surprises in this quarter. So we cannot deny that that is one of the potential that is one of the potential condition or environment that they are in right now. So this beating is good sign, but we also cannot deny that the analyst has actually slashed too much, so that the companies has been coming in to beat the earnings. Okay. So today, there are a lot of companies that is, about I think 40 or 50 companies that has been that will be having their earnings releases today, and TSM has actually reported their results, and we can understand that AXP is American Express will be issuing the results later on 8:30, and I also would want to monitor Alaska Air Group as well, because in Malaysia we can always understand that after the pandemic, we have not seen recovery until this quarter. So perhaps in the US, Alaska Air could actually show us some good growth. That would be a very, it should be turning into a more positive environment for aviation sector, and therefore there might be some opportunities within this company. So I'm trying to relate as much as possible from what we understand in Bursa Malaysia, and try to tie this catalyst back to US, see whether we can use that kind of criteria to trade as many things as possible in the US based on what we understand from Malaysia. So that is very important. So like TSM, we are very, very familiar with them. Why? Because TSM is also one of the link is because TSM serve Apple. And TSM's one of the vendor is actually Frontcan, or Frontcan subsidiary is actually serving TSM. So TSM is something like Apple within the Apple chain, and Apple chain is related to all these semiconductor or consumer electronics products. So I think a lot of people would know who is TSM. So I think TSM is worthwhile looking at. But based on what I seen in their results that I pulled out just recently, we can understand that the guidance that given to the most of the analysts is, the result is within the guidance. So there isn't any surprises there, and therefore if you look into the pre-market of TSM at this point of time, it is actually not too far off. Although you can see that first quarter 23 over fourth quarter 22, it has been down for 30%. Yeah, you can see here 30%. But because they guided, because the company guided, the management guided that it should be within this range, and therefore there is no surprises, and it is trading not as volatile during the pre-market. So normally, if there is no surprises, it will trade as per normal. Okay, so that is the idea here. So what you want to look at normally in in the company's results is definitely to beat their guidance. If they can beat their guidance, means it's good, because they are able to generate more than expected profits or more than expected revenue for their particular sector, for their particular quarter. And very good point is that we, M Plus Global, has the ability and capability for the traders to trade pre-market. And in Malaysia, we are the only broker that provides that, So pre-market is very, very important. And pre-market can also let you have the advantage to promote, to trade, okay? So I think it is very, very important that we have the pre-market and you can use our app to trade pre-market and post-market, okay? So not many people are able to provide the pre-market quotes, but we are one of them, okay? So that sums up the weekly updates, but every week we try our best, to provide some value-added services to the clients. So that is the first and foremost, very important. When you come into this live stream, I want you to take away something from it. So today we are going to talk about Netflix. I know a lot of people would like Netflix because during pandemic itself, there isn't anything, to watch or even to enjoy. But one of the entertainment is Netflix, and you can't go out. A lot of times you will be watching TV or streaming some video contents. So I think Netflix is part and parcel of they have benefited a lot from this pandemic, and I believe Netflix is also one of the good potential counter going forward. Let me drill down more on this Netflix to you, okay? So last time, this is Netflix. This is Netflix when they have this DVD by mail delivery. Okay, so which is they started off as a DVD by mail concept to users, make sure that they watch, then they return the DVD in one piece. So they started in 1997, and during this period of time, they say they want to launch a subscription model, which is in 1999. Then later stage, it went into this streaming video services model. Seems like a very far-fetched dream for them during the time, because during 2007, if you are streaming video, normally you are using what is your connectivity? Your connectivity must be very, very good, and during that time, not many people has this luxury of internet connectivity during the time. So if they want to launch this streaming video services, it is very hard, very tough, very challenging environment. But again, they did not, deter from their dreams to, provide from DVD kind of subscription model towards the streaming video services model. And later stage, when I know about Netflix is actually doing this House of Cards, whereby this House of Cards is the first TV series that is produced by the studio for Netflix, and they have won several Emmy awards. So these are some of the awards they have been won throughout the past few years, or you can see from 2013 all the 6 seasons, right? So year by year they are hitting a lot more subscribers to Netflix. This is sort of very good marketing for Netflix itself. So let's talk about the subscriber milestone. They have actually achieved 50 million in 2014. So 1 year actually after House of Cards, then it reached 50 million. Then later stage, it went up to 100 million in 2017, and in 2020 it's just go berserk, right? They went towards 200 million subscribers, and currently they have around 231 million of subscribers. So that is a very, very wonderful journey and short history about Netflix. But one good part about Netflix is that they have been always streaming other people's licensed products, such as the movie content or even TV series content is by other people. But their Netflix content mix has actually changed to more towards their own originals, from 40% in 2019 and up to 60% in 2022. Okay, so I want to mention this is because when they go into this kind of direction of producing their own originals, that is where the money will be made even more. Okay, so if you're taking like people's products, you are like a trader. You buy product A and you sell with a higher markup towards the end user. So you just are having that particular spread of trading opportunity. But if you look into own products, so they can produce their own materials, they can have easier communication with their producers, their content team, and then they deliver these originals to people. That is where their power, their strength are. Okay, so I want to mention this because they have been growing their own original content since the start of the days, or you can say after 2013, House of Cards. That was the first, and then they grew from 5 to right now is 60%. So I think it's very, very amazing that once there is more and more of these originals contents, the earnings will be more and more. Okay, so that is what I want to mention. So if you look into Netflix revenue, okay, Netflix revenue has grown, tremendously well. Based on what 20 years ago figure, we can say that over the past 16 years of CAGR, you can see that it is about 24%. So which means that year-on-year wise, we are seeing a growth of 24%. Okay, so that is the idea here on revenue part. But in terms of the net income to common shareholders, it is not as good growing trend as what we see, because you can see there's a drop here, and this drop, when you see this kind of movements in revenue, normally what you want to see in the income is also up as well, right? So I think there is some hiccups, okay, in the year 2022 for them, but overall it is still okay because we are focusing more towards the content part, content mix of originals. So later on, I will give you some more insights on that part, because I think that is more important than the net income. Because right now, what they do is they need to fork out more money before they let the people view their videos, or view their TV series or even movies, because they need to lay out all the production team production costs first before they can get the money after people are viewing it. So that is how they charge, how they recognize into their income. But more importantly is that their free cash flow is positive. Okay, so later on I will share with you that. So throughout the years, you can see that since 2003 until 2022, their net income margin actually expanded quite tremendously. Over the years, they are around the 5% range. And on the recent years, I think perhaps it's due to the pandemic itself, a lot more subscribers and economy scale is there, because you can see the boom. Actually, 100 to 200 million is within 3 years only. And during that time, more and more subscribers has paid up, so the revenue goes up, but your content is still almost like the same kind of. So as long as more subscribers is in, then the net income margin will grow. So on the recent years, the net income margin has actually grown above the 10%, 10 percentage point. So this is a good sign actually for them, because as long as they can maintain this kind of subscribers, their net income will continue to be within this range. And they expect the range of this net income will be ranging around 10 to 15% going forward. So that is their guidance, their expectation. So throughout the years, if you look into 12-year CAGR for their paid subscribers, they have been very wonderful. It has been very wonderful of 72% CAGR, but it could be a low base effect. But if you look into the 3-year CAGR paid subscribers growth, it is about 11.4. So I'm just stating this 3-year here is because during this pandemic, they are still having a growth of 10%. So which means that during the past 3 years, it is still 10% growth. It is still considered as a double-digit growth. To me, it is very, very interesting, amazing, because it is above 100 million subscribers already, and the growth is still there. Okay, the growth is still there. Average revenue per user grew by 4.5%. So it's not really very enticing. I think it could be also the price point right now. They need to do different tiers. Last time only got maybe basic and also premium. Right now there are 4 tiers. Later on, I think we will share about that a little bit more. But overall, as long as the average revenue per user is still growing, is already a good sign that they can still maintain good margins for them. Okay. So when you look at Netflix itself, the growth actually comes from when people pay for them, subscription. Why do they pay? Because they want to see more original contents. And when Netflix has all this data, they know what to do with their production team. For instance, I remember I saw some of the videos talking about how they actually let people view when you choose the film, right, or choose a series that you want to watch, actually it is actually curated to you, which means they know your pattern, they know the consumer behavior, and they would know what sort of poster they want to post within that cards, the film cards, so that for you to choose. It is very interesting that how they use AI or all this machine learning kind of process, that they will make sure that you will be able to catch up something from whatever they are showing. So sometimes if you compare your Netflix or people's Netflix, they might come up with different flip cards. So that is why that is one of the videos that I've learned about Netflix, that they curate the whatever you like, they know what you like, and they will put something that you like on that screen for you to choose. So I think that is very amazing because they have the data, and that is why they can also produce the content that people like. Okay, as long as maybe 50 or 60% people like about this, this video or this kind of genre of series, then perhaps they can actually produce before they actually happen. Okay, so content spend is very, very important. So they have started since in 2007, trying out a little bit of content spend, but lately they have been hitting about 17 billion, okay, 16 to 17 billion of content spend. What does it mean is that you can see this graph is actually very similar, okay, very similar to the charts of the content mix. So which means that when the content mix of the originals is going higher, is because they are willing to spend in producing that kind of genre or that kind of series, that kind of movies. So recently there are a lot, right? You can see, I'm not promoting for them, but some of the very hit movies such as Murder Mystery, or some of them are Hunger. Okay, so these are some of the TV movies or TV series that actually you can look at. And these are some of the originals that after they have spent money, what are the results they are getting? So as long as they are spending more in terms of content, they make more originals, the originals content mix go higher, it means that their earnings should be higher as well. But it might not register the earnings so fast because they need to wait for it to amortize, and only they can actually look at, net income might not be so accurate anymore going forward, but the more important thing is actually free cash flow, okay? So looking at free cash flow, throughout the years, they are going into negative position, but lately, they are actually turning into a more positive stance. So I think this is the reason behind it, is because they are actually producing more originals, and therefore that is actually providing them a good advantage towards getting more income going forward. So what I want to bring out on this deep dive here is that because they have been transforming from DVD to movie series or the streaming services, and the streaming services has gone hit, and right now they have hit about 233 million subscribers, and that is the way they pay off themselves at this current moment. Okay, so these are some of the originals that I can find from the some of the sources out there, that to say that you can see from this table itself, top 15 streaming series of 2022, like out of 15 of them, 13 are from Netflix, okay? And these are so much of a billion minutes being viewed of the Netflix content overall. And if you look into streaming services that they acquired, so which means that they acquired a license, but they let people stream on their platform. So this is also a part of their revenue base. But you can see that some players are there, like Disney, HBO Max, Prime Video are there. They are not really dominating, but still it is above 50% that is that people are streaming this series on Netflix. Okay, but On the other hand, you can see that top 15 streaming movies of 2022, most likely Disney will be the one taking over. I think most of these are animations and cartoons and things like that. So in this particular segment, maybe Netflix is not so much of this content producer, but it's all right because as long as they dominate the originals, the content mix of the originals goes up over the next perhaps a few years, maybe until 80 or 90% in the next 5 to 7 years, then perhaps that is a very interesting, we need to look at that as the Netflix, how will it become? Will it become a better when they have more content mix of originals? And we would know by then. But for now, I think based on my observation, if the content mix of the originals is going higher and higher, they should be making good money going forward, okay? So this is the recent results for first quarter Netflix result. You can see that the free cash flow part has been turning into a positive trend over the past 4 quarters plus the latest quarter, the first quarter 23. Their revenue is there, growth is, not to say very good, but at least it's 3.7%. Again, I'm not saying that they might not be going forward, but I'm saying that you can see that the growth has been coming down from 9.8% to 1.9%, but in the recent quarter, it has been on a positive of 3.7%. Still okay. I would say that that is a very interesting figure. And as long as I think within the range of 3 to 10%, that range, I think it should be fine because their base is very, very big right now, about 30 billion per annum in terms of revenue, okay? So some of the forecasts that's given, by Netflix management is that they are likely to continue to grow at least 3% year on year for next quarter, and operating income of US dollar 1.6 billion. This could be sort of a flattish year for them. And operating margin is very important. They want to maintain 19% and 20% for the operating margin. Operating margin is not net income margin. Just now I've showed the net income margin is about 15%. So as long as we can see this around this range of 19%, 20% of operating margin, this is a very interesting company to look forward to because why? Let me show you these charts first. Because since pandemic, I think 2021, they have rallied towards $700 US. Right now, it's trading at 322. So which means that this has been half, okay? This has been half in terms of their share price. But if they can still maintain the growth or operating margin going forward at about 19-20%, that is a very interesting figure that we might have a good turnaround story for them or continuation of the uptrend mode for them, okay? So coming back to some of the competitors like Disney, Warner Brothers, their market cap is about 184 for Disney. But I don't think that, Disney is their, it's definitely their main competitor. But the streaming services is still dominated by Netflix. And I think Netflix still has the advantage for these streaming services. Although Disney and other people are coming up with their own streaming services, but it's very, very tough environment. I just want to say that it's very tough environment, and if Netflix are able to be ahead of them during this position, I think this could be an opportunity to look at the share price again when it dips further. Why do I say it might dip further? It's because in the midterm view or shorter term time frame, what I don't like about is the recent sell down phase after a downward trend. Okay. This is showing that it is lower high formation, and they have downward violation below the 320 US dollar level. So that is what I don't really like at this juncture. Perhaps if they can reclaim above this 320, then perhaps we have a chance of in the short to mid term, there could be some rise in terms of the share price. But overall, I think Netflix is a good company. We can do all this deep dive again. Just let me know if you have any companies that you want to look into the deep dive session, maybe like this session every week, then perhaps you can write in what do you want Loui to deep dive into. Okay, so that could be one of the interaction, we don't want just that we feed you just whatever we like, but as long as you all want to have the deep dive into certain company, perhaps we can do that when we have the capability to understand more about the company that you like, then we can do a deep dive into that company. Okay, so I think that is towards the end of the session. Just to sum up what I've been saying so far is that overall, just now we have mentioned about market, we have mentioned about the three factors that we are looking at right now, the gold prices, the crude oil, and also the US Treasury yield, Treasury bond yield. That is the three indicators that we are looking at right now ahead of the FOMC meeting, because we want to know that after the FOMC meeting, are they still bullish on the economy, or are they bearish on the economy? Are they thinking that the economy might go into contraction mode and things like that? But based on our understanding is that because of the yield spread of the 2-year and 10-year is in a negative territory, is inverted yield curve, there is a very good chance that our economic activity or the US economic, the growth might not be there and might be softer than expected, and they might go into sort of a technical recession or recession mode going forward. But again, I'm not fear-mongering, just that this is based on stats. We have to position ourselves using all the data that we have. So that three indicators perhaps is also telling us that potentially traders in the market are positioning for that to happen, because gold price is at near towards 2000, near towards all-time high. Secondly, crude oil prices are unable to spike higher but has been falling over the past 5 days, and also the US bond yield has been going up. An inverted yield curve is there as well. So these are some of the data that we are looking at. Perhaps will give us more understanding about the stock market going forward. Okay, so so that sums up today's session. We have another Q&A session later on. So stay tuned for this live stream. We have a video, then we'll come back again. Thank you.
The electric vehicle industry is now the talk of the town. Start trading EV stocks now with M+ Global. Driving an EV is no longer an unattainable dream, and in the future, the EV industry will be one of the fastest growing industries in the world. Many EV brands have also started to appear in Malaysia. Brands such as BYD, BMW, and Tesla have all entered the Malaysian market.
Electric vehicles are not just vehicles. They have the ability to shape the lives of all Malaysians. With smart mobile living spaces and autonomous and comfortable driving experiences, this technological revolution will bring immense potential to the Malaysian market.
Driven by policies and growing demand, the EV market has plenty of potential. So how do you, as a Malaysian investor, seize this once-in-a-lifetime opportunity to invest in EV stocks? Let's use the US stock Tesla as an example. First, enter the stock code TSLA or the stock name Tesla. Once you enter the stock details page, you will be able to see the live stock price. You can also view basic stock information such as market capitalization and technical trends. You can customize the time range for the share price movements from 1 day to 5 years, and even from the company's listing date up until now. From this chart, you can see that Tesla's share price has continued to rise from $21.80 to $182 per share over the past 5 years. It has risen more than 7 times during this period, far outperforming the broad market average. There is a wide range of stock analysis tools available to help you make a more comprehensive analysis, such as capital flows, the latest updates, and various fundamental indicators. This includes ROE, earnings performance, net profit margin, assets and liabilities data, and cash flow, and more to help you stay up to date with the latest company news. If you want to trade a stock, click Trade and enter the number of shares. Then click Buy or Sell to place your order. An order has been submitted message will be displayed once the order has been placed. When the order is matched, the transaction is now complete. With M+ Global, you can trade a variety of EV stocks in the US and Hong Kong stock markets, as well as diversified investment vehicles such as ETFs to help you better allocate your investments. There is also an information section, Click on Top News to stay informed with the latest investment trends at all times. Identifying investment opportunities is just the first step, but choosing a good trading platform is winning half the battle. Open an account with M Plus Global today and take control of all your global investments right at your fingertips.
To see more videos from M Plus Global, subscribe to our YouTube channel today.
M Plus Global, winning the world.
Hey, hello.
Hi everyone,
Welcome back to this M Plus Global live stream. I'm Hui Yi.
and I'm Loui Low.
Yes. And for those who have come back, you can give us a thumb up on the comment section so that we know you are with us, or you can say you are back. Yeah, so thank you so much, Louis, for providing
No problem.
very valuable insights on the US stock market and on the, the general economic condition. And also, he had also shared a lot about the Disney, really a deep dive into the
Netflix.
Yeah, Netflix stock. Yes. So for those who have any questions, you can put in the comment. We will try to get our Louis
Yes,
to answer the question.
Sure.
Yeah.
Yep. Oh, thumbs up. Thank you so much. Yeah.
Yeah, thank you so much. Welcome back. Okay. Yeah, so I think throughout the session, the most I like the part I like the most will be the inspiring story of the Netflix. They transformed from a DVD operator into a live the
Streaming service.
Yeah.
Yeah. I think this is a very at the start of this concept is very small, and also they did not know whether they can hit it big or not. But at least they tried to provide some service that not many people are providing. During that time, I still remember we can still rent the tapes,
DVD.
Or DVDs. Yeah. I have exposed my age right now.
It's time.
No, I think that is the type of service that they're trying to provide, right? So certainly when they do that without the internet connectivity times, it's certainly interesting because we don't have internet connectivity. How can we view videos or movies? So I think that is a good startup that they really understand that they want to provide. They want to bridge the gap that they have seen. So I think it's a very interesting startup lah.
Yeah, and then they transform from a DVD operator into nowadays the stream.
Yes. And because of we have so much of good connectivity right now, we can easily stream 4K videos without any issues. So I think overall, this is the era for them. This is definitely an era built for them because with the internet connectivity, they can pull out. The users can easily pull out their content easily. So if they don't like this content, they can go into other contents. But as long as they are staying on Netflix platform, it's very good. Yeah.
Yeah, but nowadays I think I saw news that day is regarding their password because I know for my brother or someone, they might just use the same account and same password and then they can just access Netflix everywhere.
Yeah.
And then this may is a negative impact on their revenue and subscriber base. So I saw that they are actually doing it's called something like password sharing crackdown.
Password sharing crackdown, yes.
Yes. Yeah, can you share a little bit more in layman term of what is that and how would that actually impact on their revenue and their subscriber base?
Okay, I think for that particular password sharing crackdown is certainly they want to improve because if I can always subscribe one account, then share among 5 users, then therefore there is leakages of revenue for them, right? So they are trying to find ways, but also try not to impact too much on the cancellation. Yeah. So in other words, it's definitely a negative thing for them because if they want to do this, definitely they will have some subscribers say that I don't want to subscribe anymore. I will use other streaming services.
Yes.
So that is definitely that sentiment is actually affecting their revenue. But if you look into this quarter result, it's actually growing. So it's still able to convert, okay? What I want to say convert here is that because last time one account maybe can share among 3 to 4 users, but if they are able to make a conversion, okay, for 2 users to their subscribers, then that would actually make up some of the revenue. After cancellation, maybe 1, but 2 add-on, so they still can get 1. So in this quarter itself, I think, if I'm not mistaken, I saw some articles saying that this quarter they have added about 1.75 million users. So I think it's still on a growing trend, so which means that they are able to convert at least the shared users, some of them into paid users. Yeah, so I think for the time being, I'm not too worried on that because as long as the conversion is still generating net addition users to their paid subscribers, I think that is still fine.
I see.
Yeah.
But I also saw a news that they are also delaying this password sharing, crackdown. Are they actually delaying?
Okay, so on this delay, right, what I understand is that because if you, just now I've mentioned that if you push it too hard, they might not convert even these 5 users, there won't be anyone converting into on this, and they might cancel. So I think Netflix is afraid of this happening, in a bigger manner, and therefore they are trying to delay this measure maybe to 2nd or 3rd or 4th quarter. But as long as all this effort are still they will have a measure. I'm certainly confirmed that Netflix will have the measure to say that, as long as there is still conversion of all these subscribers back to their net additions of their subscribers, I think they will still maintain that until maybe when they see negative, people start pulling out cancellation, then they might, maybe strike it off, maybe delay further or whatever it is. But for the time being, I think the sentiment is definitely it will impact their revenue because maybe they will get some cancellation effect of all these measure. But I would say that as long as there is still net addition to it, I'm still not too afraid. Yeah.
I see.
Yeah.
But in terms of the number of subscribers, right? Because on a quarterly basis, I saw their number of subscriber growth actually is like the weakest since like 2010, except for the 2022. What's your take on that in terms of subscriber growth?
Okay, if you ask me about subscriber growth, that is sort of like weakest, I think this could be also the impact of after so many rounds of subscriptions during the pandemic. And right now, people start going back to work and they have lack of this, time to watch movies or even stream videos. And I think this could be a place whereby the subscribers may not be catching up with the pace. And also with the inflationary pressure, they might start to see what is need and what is want, right? So if it is not necessary, they might not, go into. So inflationary pressure definitely is creeping up, and therefore that could be also the reason whereby the impact of the net addition is the weakest amongst the whole maybe 2 to 5 years. I think that's the reason. Yeah.
I see. And then there's questions.
Yeah.
There's questions from Selena saying now Netflix is restricted the on sharing ID and a lot of negative feedback on that. So do you think it will affect their revenue?
So I think this one is the same as what we have mentioned, the password sharing crackdown. So, but basically what they do is that they make sure that they are within the same vicinity, same region, make sure that you are using the same maybe IP, same Wi-Fi, whatever it is. So they try to make sure that you are in a confined range, only that particular region can use. But I think there are a lot of loopholes on this matter. So when you want to find ways to crack something down, I think you can. When there's a will, there's a way. So perhaps when this sharing ID take effect, surely it will affect their revenue. But for now, first quarter results still, still decent. So as long as they are still able to see the net revenue, net subscriber growth, I think it's still quite safe for them to continue with this measure until they see negative, maybe cancellation. Then they'll try to see what marketing, what kind of gimmick they can do to put it out for them. Yeah. Okay.
Yeah.
Do you want to show how we can find Netflix on this?
Oh, sure.
Yeah. So maybe you can show some of these features out there. Yeah.
So this is what you can see when you're on our M Plus Global apps. So you can just click on the search button here up there, and then you can just type Netflix. It's not necessarily you have to key in the code. You can also straight away, like me, just click in Netflix, and then it will come out. And then just click, and then you can see it.
So actually, can we see the pre-market from this?
I think you can, because you have added it into the watch list.
Yes.
And then you actually can say it from like the watch list here. Yes, and then because there's a lot, so
Yep, this one.
yeah.
So pre-market right now is doing about negative 1.14% at 319. The last closing was 323.1.
Meaning it's like negative 1.14%.
Yes, correct. So right now it's trading lower. So maybe you can look into this, whether any technical indicators that you like. You can always look into this charting tool. And I like to use this charting tool to see, always you can move the cursor around to see where is the resistance. This could be the resistance. And the support will be located around this range. So that is how you can actually look at it. Okay.
It's so convenient it is. You can just like
Yes. So you can also change from monthly to weekly to daily, up to your preference of trading time frame. So just now it's 319, right? So if we look at 319, it is trading at this range. Okay, so 319. So so you can actually look into that kind of technical analysis point of view. Yeah.
Can we say there's actually a window for growth since 319 is just like between these resistance and...
Oh, okay. If you look into this could be the real support at this very, very short time frame. The 315, 316 is definitely short-term support. And also, if you look into last closing for 19th of April, this is a hammer pattern. It's a very clear cut saying that buying interest is there for that particular day. And also, if we look into this bar itself, it is closing at almost the highest point. So it's a hammer, and likely if we use this as a measure of if we understand the sentiment behind it is definitely on a bullish tone, and therefore 315, 316 is definitely the support. And if we look into today's price, as long as it is not trading below 315, I think there's a very good chance that it can break out above the 325 and go higher, at least for the short term. So short term wise, maybe 344 will be the resistance. Okay.
Oh, okay. Now we learn something from the technical point of view.
Certainly, technical is actually for entry and exit. So it's very good to determine, the entry and exit based on technical analysis. Sometimes people use fundamental analysis to like PE ratio, PB ratio to justify whether is it cheap enough or expensive enough to sell it or buy it or sell it respectively. But another way to do it is definitely using the technical analysis. Yes.
Just now you mentioned something like the hammer candle.
Yes.
So for those who want to learn more about technical term, can you show like how hammer candle looks like?
Okay, so the latest bar is the hammer candle. Okay, so it's like you are using a hammer, like the long shadow is like the holder of the hammer. Then the top part is the the hammer that you use as a tool to do things. So overall, as long as the shadow, generally speaking, a hammer candle must consist a body and also a shadow. So the shadow
Shadow is the line.
yes, the line.
Yeah.
So as long as the line is actually 2 times or 3 times more than the body, which is the red color if you see in this,
over
yes,
there,
yes.
right?
So as long as it is 2 times or 3 times, that is a general rule of thumb to say that this is a hammer pattern. And the sentiment behind it is definitely saying that because the intraday has sold down towards that lowest point and managed to rebound all the way up towards the highest point of that particular bar, it tells you that the sentiment has been changing throughout that particular period. So which means that to me, this is a strong buying interest on that particular day. Okay, so let's see what's going to happen perhaps today or even until tomorrow or next week. Because if they are still trading below this hammer candle, I would still say that this is not as strong. Okay, so as long as they're staying below this hammer candle's highest point, it is still not considered as negating the downtrend yet. So it is still within the downtrend because it is still below the hammer candle.
So it's cross above the hammer candle.
Yes, yes, that is the best case scenario that we can actually look at.
So if the candle is like red in color or green.
Very little, what do you call it? It is not so important in terms of the green or red because as long as the closing price and opening price is near towards the top, I think that is considered as a very healthy range for hammer candle to be formed. Because if it is just one bit higher or one bit lower or within that range, then I think it's still considered hammer candle, and hammer candle is definitely a good sign for reversal pattern. Okay, yeah, yeah.
Okay. Okay. Yeah, so this is what we can learn from this quote in the graph itself, and we can click on news. I remember I saw a news before. Actually, if we buy Netflix during their IPO time, and then I think like we spend $1,000, then I think now your shares will actually worth like 299K something. Okay.
Yeah.
Let me show you the news. Okay, I couldn't really remember.
I mean,
But I think,
if and only if we have.
Yeah, so on our apps, when you click on Netflix and then you click the news here, you can scroll down and this will be like all the news related to Netflix. So when you scroll down, yeah, this is the news I saw, I guess. Yeah, like if you invest $1,000 during its IPO,
Yes.
and then what happened is because they do a lot of share split. So share split is actually like when you get one share, and when they split the share, your share will become 2 shares. Yeah,
Okay.
something like that. Yeah, correct me if I'm wrong.
Yes. Right.
Yeah.
Share split.
And then they do a lot of like share split, and then the share price growth, and then I remember I saw it like your investment will be worth like $299K today. That's impressive.
So it's like 290 over bagger, right? I mean, who would have thought that Netflix had become so well to do right now, right? So I think one key factor is I always look at earnings and also look at the revenue. I always think that earnings will always support the share price, and therefore what we are always monitoring is definitely the earnings. If earnings continue to grow, I think it's worthwhile looking at it from that point and try to pinpoint a place to go in. So when earnings growth is there, revenue growth is there, definitely the share price will follow as well. Yeah.
Yeah, makes sense. So you mean the fundamental is still very important?
Yes. I mean, there are certain dodgy stocks as well. I mean, doesn't go, the share price can go against the fundamental as well. But generally speaking, if you look into all this, value investing or whatever it is, they will say that, first thing first, you have to have fundamental. So if we are going with that idea of as long as the company is not losing money, it is still growing, therefore it is a good company. So why not we take an opportunity within this kind of company? So as long as they have earnings, we can sleep well at night. That is what I want to be sure.
Sleep.
Yeah. Yes.
So this is the news. If you want to know more, you can just scan the code here over there.
Over here. Yes.
Yeah, and then download the apps, and then you can click on the news and check out more on that. Yeah.
Yep.
So go back. Yeah, I think
Oh,
maybe we can talk more about the broader market.
yeah, sure. I saw someone is asking about how is the US market going on today? Any
Any
big fluctuations
fluctuation
for
for
stock?
stocks?
Let me check. I mean, I couldn't see for now. But again, Hong Kong, today ended just very flat. Didn't have much movements. I think it's also because everyone is having a break, and also in China also have this long break as well. So perhaps the volatility has been going slower and slower, softer and slower. Or you can actually look in the US market. It's actually not really moving. I mean, it's not really moving that drastic, movements over the past couple of days. It has been just, very flattish mode. I think all these are contributed by uncertainty in earnings. Especially just now, if you notice, one of my slides has been talking about Netflix. Their management talk about their earnings might not be catching up. I mean, not to say they're not catching up, but it will be a bit of flattish, or even towards a slight decline in operating margin. Why is it so? It's very important to understand. Over the years, we have been seeing we have been in the environment whereby it is a zero interest rate policy environment. What does that mean? It means that they can borrow money without paying high finance costs.
Yes.
So the differentiation right now is when we are in 4 to 5%, like US interest rate is 4 to 5%. So which means that when they borrow money, they have to pay at least that kind of rate,
Interest rate.
So where does the interest rate part under within the financial statement? Yeah. Do you know?
It will be under the operating expense.
Yeah,
right?
I know. I mean, it will be before it is under finance cost, right? So it's definitely before the earnings, net income.
Okay.
Yeah, so what I'm trying to say here is that over the years, you are seeing that the finance cost may be near to zero because they need not to pay back so much in terms of borrowing. So right now, when they are in this kind of environment, even Netflix says that their operating margin may be lower. So which means that they have to pay more in terms of their borrowings or things like that. Therefore, that might dampen their earnings. Okay, so again, this is one of the factors that may affect US corporates this year. So we really have to watch out what is going to happen for the first 2 quarters this year, because this is the full impact of high interest rate environment, high inflation pressure kind of things. So all these will compound and contribute to perhaps lower earnings and whatever not. And therefore, these first 2 quarters is very important for us to understand. So coming back to the US markets question, I think I don't see a lot of fluctuations today as well. I believe that even when the oil prices is actually coming off right now, perhaps the oil and gas sector will also being in a retracement mode and things like that. So I would say that today's market, or this 2 days market will be sort of like a muted. But also have to understand that if there is any surprises in all these earnings, that will contribute to higher volatility in the stocks, individual stocks especially. And broader view, I think it is quite safe based on technical perspective. It is quite safe. Why do I say so? Is because most of these indices are actually above SMA 200. So I would say that they are within a potential uptrend mode. But again, they can be also some short-term price movement, downwards movement, because we are entering a phase whereby it is again another FOMC meeting, and they might be anticipating more hawkish tone, or and therefore that is so-called bad for the market. So this period of time with earnings coming in, with FOMC meeting, heading into FOMC meeting, so perhaps that will also affect the market direction. So long-term view, I'm slightly more positive, but short-term view, maybe there is some negative impact towards these 2 weeks. Yeah.
I see. These 2 weeks, I think it's part of it will be also due to the earnings season.
Yes,
right?
yes.
Yeah, but like in the longer term, do you think, because I saw the US dollar is actually strengthening, that might be a lot of factors affecting it as well. But one of the factor also, the investor might be pricing in the FOMC meeting.
Yes.
So does it mean that the market is actually expecting hawkish tone moving forward?
Okay, I wouldn't say hawkish tone, but I would say that the consensus right now is expecting a increase of 25 basis point. So at least that is considered hawkish. But compared to last few rounds of incremental of in terms of quantum of the interest rate hike, last round of previous few rounds it is at 50 basis point. So compared to that kind of incremental quantum,
Yes.
I think 25 basis point is less hawkish. It is hawkish, but it's less hawkish. But again, to answer your question on the US dollar appreciation, I think part and parcel is because of the FOMC meeting that is upcoming FOMC meeting. Because if they are going to increase another 25 basis point, definitely that would be so-called feel-good factor for the US dollar, and therefore US dollar has been creeping up higher and higher recently. So overall, another situation is whereby when US dollar is strengthening, it's actually not so good for the US corporates. Do you know why?
Okay, because this is not good for their export.
No, because when they translate, sorry. What I'm trying to say is that US dollar actually will affect their earnings when US dollar, when it's stronger, which means that people, when they translate back to their earnings, it might be lesser. So that is why when their earnings can be also affected by the US dollar currency as well. So overall, I think when we are seeing, like for instance, Malaysia, right? We like weak currency, weak ringgit Malaysia because that is good for export, right?
Yes.
When we receive money, we receive more. But right now, if our ringgit is more stronger, then we receive less in terms of that value.
Amount?
Yeah. So it's the same thing as the US dollar. So for US corporates, they also want to manage this US dollar risk as well, fluctuation. So I think Netflix has mentioned the year-on-year decline in operating margin is attributable to the appreciation of the US dollar against most of the currencies over the past year. So I think this year really is about looking at US dollar appreciation, looking at interest rate, elevated interest rate hike environment, because this will impact their finance costs. This will impact their earnings.
Yes.
Then the US dollar currency will impact their earnings as well. So both of these things will be full blown this year, because if we are at the because the cycle has not ended for the interest rate high cycle has not ended, so which means that the full blown impact will be this year. So this year is actually crucial to look at earnings and to see whether they can generate more earnings than last year or not. But based on these two factors, actually, perhaps we might want to tone down in terms of our expectation. Yeah.
Just now you mentioned that the interest rate hike might not be so aggressive after May or maybe mid of 2023.
Yes.
So after that, do you think the situation, because currently it's like fluctuating, so after that, do you think the situation for the company's earning and also the stock market will normalize?
Yeah. So if there is a pause in terms of the interest rate cycle, then definitely they have time to react to that, and they can position themselves in terms of their forex currency hedging or whatever it is. Then perhaps they have time, they have leeway to build again on in terms of their earnings by then. Then we will need to see the normalizing effect. Maybe it will come next 6 months after the interest rate has taken a pause. So which means the full impact will come in maybe in first quarter of 2024. So it might be taking some time to normalize, but certainly when they sort of like get a feel of what is happening in the market based on this, they have been so comfortable in this zero interest rate policy. So if they need to swim inside this elevated interest rate high environment, they need another strategy to do that. They need to relearn and rethink about their strategy going forward. So I think it will be tough. It will be tough for them. It will be challenging, but I wouldn't say that companies cannot grow during this environment.
Yes.
Companies still can grow, just that maybe at a slower pace, or maybe at an expense of their earnings as well. Yeah. So yeah.
I think we can also like monitor the performance of the company like on the quarterly basis as well.
Certainly. You want to show anything on the?
Maybe we can go back to Netflix. Okay, so for example, research is the screen on. Okay,
Yeah.
Netflix. Okay, so when we go to profile, and we can change this ROA, ROE income statement. So okay, this is the income statement you can see here.
Okay.
And then I think we can change this. Okay, change to quarter, right? Quarter 3, 9 month.
Okay.
Yeah, to what?
So actually, based on our app itself, it is actually a one-stop solution to all this. So I think if you look into all this information, you can easily with one app itself, you can actually look into all this income statement, balance sheet, and whatever it is.
And
So
also the margin.
yeah, so I think it's a very useful useful tool for traders, and these are provided for you for free. And we are one of the Malaysian broker that can provide this very good one-stop feature. So I think a lot of traders would want to know more. You can actually join in our live stream every day during the 9 to 11 in the morning, and also 7 to 9. But one thing I would want to also highlight to you is that if you look into overview, and I'm not too sure whether you can see this constituents. Yeah, okay. So when we are trying to see the peers comparison, right? Just now we mentioned Disney is one of them, and if we look in the profile and we click on overview,
Meaning the Netflix profile.
yeah, Netflix profile. Then we can see these movies and entertainment. So when we click into movies and entertainment, there is this movies and entertainment index. Okay, so-called index. How do they do is that they basket a whole basket of constituents here, which is related to movies and entertainment. So you can see Warner Music is here. You can see Spotify is here. So all these are inside. So this is how they compile. I mean, this is just a reference to give you an idea that whether the whole basket is moving together or not, and you can straight away compare to the competitor itself. So you can just check into all this. Yeah. So that is one of the very good feature to me, because it can show me the peers comparison straight away. And yeah, this is provided for free, and it tell me about it, because it is definitely it's a one-stop solution for all this. You can actually look into that. Okay. Yeah.
It's interesting. I see. So let's see, is there any other comments?
Yeah, someone wants a deep dive into Occidental Petroleum. Yeah, I can do that, but we need some time to study it first. Yeah, surely, but we'll take note on that. Yeah, if you have any other things that you want to put in, or bring it up in the comment section, so that we can actually answer for you. But
But thanks for the questions, Lai Meng.
Yeah. So even okay, so back to the app itself, right? Even there is the analyst ratings as well. 49% is buy, 44% is hold, and 7% is sell. So more likely, people are asking. I mean, the analyst is asking the investors to hold onto it, or even buy into Netflix.
So this is like the combination of all the
yes. So this is like a consensus, and it gives us an understanding what the market is actually looking at. And they give us some target price of 361, but this is just for reference. And the estimated return is at 11.9%. So I think based on this app itself, it gives you a lot of information that you can do decisions straight away from this app. I think, yeah.
Yeah.
Anything else?
Can you scroll? Wait.
Yeah.
We're checking on the comment.
Yes. Okay.
Okay. Maybe one last question for the session.
Okay.
Yeah, because we were talking about the broader market and currently the inflationary environment. And so under this kind of situation, which sectors do you think in the longer term and also shorter term we should actually invest in?
Okay, so in the broader view, just now I mentioned, maybe I've painted something quite soft or even flat to negative kind of environment. But one thing for sure is that if you look into the overall sectors that has been moving, even for Malaysia, even for other other stock markets, I think one sector that has been propping up in terms of the radar on our radar is definitely the utility sector and also the telco sector. I think why is it so, right? I mean, you would be want to understand why telco and utilities might be the favorable sectors to be traded in. So I guess over the years, utilities and also telco sector has been known for their high dividend paying culture. So normally during, like, if utilities must be related to electricity or even water utilities, right? So these two are actually the needs for the masses. So which means that during bad times, good times, you will need it, right? So when you need it, therefore these companies can generate money and generate earnings, and they are considered as cash cow, and they don't need a lot of expansion, because if they are already matured enough, they have a lot of assets. They just they are there to they're just there to collect money. They're just there to collect money. And also, you think about it, when energy prices has been soaring, going up higher and higher, and do you think that they can make more money in the US or even the UK side of utilities company? Definitely, they can make more money. So what I think about, when it is going into this uncertain period, people will always go into something more certain, which is utilities or even telco. Like telco is like, you cannot live without it. You cannot live without your handphone. You cannot live without your network or Wi-Fi connectivity. So I think network, Wi-Fi or whatever it is, telco and utilities are one of the more favorable segment, and they do provide high dividend. Okay, so that is what people or what investors like.
Is it because safety?
Yeah, it's called defensive nature. Yeah, defensive nature kind of sector. And definitely this is the part whereby when people are afraid, uncertain, or fearful about market, they would flock into this telco and utility sector. So I think telco and utility is still quite safe. In Malaysia, we have YTL Power, Hill ran up the hill. Okay, and in the US, I think some of the utility sectors can also be providing good opportunities. So I guess you can actually look into that. Perhaps if we look into, I'm not too sure whether I can check this out. Yeah, XLU. XLU is actually utilities sector fund, ETF.
Oh, it's ETF.
Yeah, so ETF will provide you a basket of stocks. So you need not to select, pinpoint to whatever stocks you want, but ETF is a basket, so you need not to select. So you will not miss out in the sense that you select company A, but
company
B went up. Yeah, if you select company B, then company A went up. Okay, so it's like you have this dilemma of choosing companies. But in an ETF is great because it is a basket of stocks. So once you have put in money in this ETF itself, basically it will promote. I mean, it will. If the team is correct, its sector team is correct, then you are most likely to have a higher chance of making money. So this is some of the ways you can actually use to check. I mean, to understand which sector first. If you are a sector but you don't know what to pick, just pick ETF. ETF is the most likely easier kind of picks, because you are picking a sector, you are not picking the company. Yes. Yeah.
For your information, you can trade ETF on our M Plus Global app as well. Yeah. I think we should wrap up.
Yeah, sure. We should wrap up this session, and perhaps then you can go ahead with the special
exciting session, which is the Q&A session, the mini game, which you can win amazing prizes here.
Correct. So make sure you share this out to your friends, and make sure they can also get that kind of gifts later on. So I will stop here, and I'll pass on to. We are going into one short break first before we go into this next session.
Yes,
so no problem.
Yeah. before we start the mini game later, please remember just to download our M Plus Global app. Just scan the QR code here, and then because you will need it later when you answer the questions. Yep. Okay, see you later. Stay tuned.
The electric vehicle industry is now the talk of the town. Start trading EV stocks now with M Plus Global. Driving an EV is no longer an unattainable dream, and in the future, the EV industry will be one of the fastest growing industries in the world. Many EV brands have also started to appear in Malaysia. Brands such as BYD, BMW, and Tesla have all entered the Malaysian market.
Electric vehicles are not just vehicles. They have the ability to shape the lives of all Malaysians. With smart mobile living spaces and autonomous and comfortable driving experiences, this technological revolution will bring immense potential to the Malaysian market.
Driven by policies and growing demand, the EV market has plenty of potential. So how do you, as a Malaysian investor, seize this once-in-a-lifetime opportunity to invest in EV stocks? Let's use the US stock Tesla as an example. First, enter the stock code TSLA or the stock name Tesla. Once you enter the stock details page, you will be able to see the live stock price. You can also view basic stock information such as market capitalization and technical trends. You can customize the time range for the share price movements from 1 day to 5 years, and even from the company's listing date up until now. From this chart, you can see that Tesla's share price has continued to rise from $21.80 to $182 per share over the past 5 years. It has risen more than 7 times during this period, far outperforming the broad market average. There is a wide range of stock analysis tools available to help you make a more comprehensive analysis, such as capital flows, the latest updates, and various fundamental indicators. This includes ROE, earnings performance, net profit margin, assets and liabilities data, and cash flow, and more to help you stay up to date with the latest company news. If you want to trade a stock, click Trade and enter the number of shares. Then click Buy or Sell to place your order. An order has been submitted message will be displayed once the order has been placed. When the order is matched, the transaction is now complete. With M Plus Global, you can trade a variety of EV stocks in the US and Hong Kong stock markets, as well as diversified investment vehicles such as ETFs to help you better allocate your investments. There is also an information section. Click on Top News to stay informed with the latest investment trends at all times. Identifying investment opportunities is just the first step, but choosing a good trading platform is winning half the battle. Open an account with M Plus Global today and take control of all your global investments right at your fingertips.
To see more videos from M Plus Global, subscribe to our YouTube channel today.
M Plus Global, winning the world.
Hello everyone, welcome back. So if you are here, again, give me a thumbs up. So just now we had Loui here with us sharing a lot about the broader market trend, the gold price, the crude oil price, and we also have a very deep dive into the Netflix stock, and also he shared about which sector to invest in also. So after that, thank you, Lai Wang, thumbs up. Okay, So now we will be going into a very exciting session, which is our mini game session. So it's very simple. You just I will ask you questions and you just answer by comment under the comment area there, and then by the end of the session we will announce the winner list here. So before that, make sure you download our apps by scanning the QR code here so that you can find the answers from there. And maybe we should forgot to mention a very important thing, which is if you download our apps and then you deposit a minimum of 10,000 ringgit, and then you can straight away get a five Grab shares into your account, and you can also get a real-time price quote level 1 for both Hong Kong and also US stock market for 90 days. So this is a really a no-brainer deal. You should get it. Okay, so just scan the code here and download and register. It will not take you longer than 5 minutes. Yeah. And yeah, maybe we should go to the Q&A session. So question 1, as you can see on the screen, which company is the largest competitor of Netflix? Yeah, we have talked a lot about Netflix just now with Louis, if you were with us just now. Yeah, we talked about Netflix, and wow, a lot of overwhelming response here. Wow. Seems like you guys are paying attention. So Lai Ming say Disney, Kuala say Disney, wonderful. Yeah, Disney. Yeah, I guess you already know the correct answer for it. Yeah, so yes, the answer is Disney. So yeah, the winner list will be announced at the end of the session. So stay tuned with us. So maybe we'll go to the next question. So the second questions will be, which of the following indicator is part of fundamental analysis? So it's the MCQ questions here. A, MACD. So B, EPS growth, and C, volume. So fundamental analysis is actually some things like we look at the company's fundamental, which is the business, the outlook of the business, and also the financial statement, how the business doing, and also what is the earnings. And wow, Raymond, wonderful. Wow, Lai Meng, you all answer B, right? Quite a EPS growth. Liao Yoklong, yeah, also B. So you all think EPS growth is like a part of fundamental analysis? Okay, let's see the answer. So the answer is B. You all are right. Yeah. So again, please download the QR code here. Download the M Plus Global apps through the QR code here, because you need to fill in the Google form later, and you need the UID from the the apps registration there. Yeah, next questions will be, why the U.S. Federal Reserve insists of increasing interest rate? Yeah, this is more towards like a little bit of economic knowledge here, I guess. So I guess just now we were talking about it also, like why is there an interest rate high? Also, Kuala say inflation. Do you guys think it's the correct answer? Inflation keep high. And Lai Meng say to bring down inflation. Bring down inflation, yeah. Bring down inflation rate. Yeah, Raymond said. Yeah, I guess inflation was right, but to bring down inflation is like the real reason behind it. Yeah, is there any answer? I guess you all got it right, to bring down the inflation rate. Okay, so we have a last question here. Which stock is the most expensive stocks in the US market? So A will be Apple, B, Berkshire Hathaway, and C, Tesla. So for information, most expensive stock doesn't mean the market cap, but it means the price of the stock itself. You can just check in our apps, but I guess you guys already got the answer. So A will be Apple. B, Berkshire Hathaway is actually the one related to Warren Buffett here. And yeah, you all got answer. Answer is B. Okay, Lai Meng said A only, B is cheaper. Thanks for the information. Yeah. Yeah, I guess we should wrap up the session, and we will announce the winner list later, so stay tuned with us. Yeah, so before that, you can actually download the apps here again. I know I'm repeating myself, but because it's important to get the UID from the registration itself, so that you can win, you can fill in the Google form when you win the prize. So maybe I'll show you how to check your UID there. Okay, wait, say bring up the screen here. So when you click on the apps itself, then you can see this is the home page, and then you click on me. So there you go. There's a gray color little number here saying LJY. What? Yeah, that one is your UID for on the M Plus Global apps, which means you need to fill in this later if you are the winner. We will post the Google form link under the comment section there later. All right, if you guys have any questions, you can just feel free to comment, and then I will try my best to address your concerns. I guess I saw a question just now from, not sure whether it's a Facebook or YouTube saying, oops. Scroll a bit. Just now that questions. Okay, never mind. Because okay, just now I remember that there was a questions. Is regarding like under this current situation, do you think growth stock or cash cow or development stocks, which one is actually better to invest in? So I guess our head of research, Loui Low, had actually answered the question earlier. He mentioned the defensive stocks will actually be the you can invest into the defensive stock, but this is not a recommendation. You still have to like do your homework, and then it will depend on your risk appetite as well. Yeah, hope that answer your questions. And let's see whether the winner list is here. Oh, so you know what, we have got the winner list here. So, okay. So Lyman said, yes, defensive is the best, utilities and telco. Okay. Yeah, so the first winner for the day will be Chia Wan Chao. Congratulations! Again, we will post the link for the Google form under the comment section, and please remember to fill in the Google form there so that we can contact you and you can win the prize. Okay. Remember to download the apps as well and register through this QR code here. Okay, maybe you're excited. We can go to the second one. So the second winner will be 快乐人. Congratulations! Okay. 快乐人, are you here? Yeah, I guess you guys can see the Google link now. It says congratulations to all the winners, and there's a Google form link down there. Just click in and then fill in, and then your name and also the UID like I show you just now. And also I see 快乐人 say, yep, thank you. Oh, okay. It's great you are still here. Yep, thank you. Welcome, welcome. Yeah. So the third winner for the day will be Low. Hello, Low. Are you here? Shawan Chao say yes. Oh, so the price for today will be 20 ringgit cash trading. Trading cash, which will be credited into your trading account and plus global trading account. So yeah, remember to open an account to grab the price. So, who is the final winner for the day? He's Lai Meng. Congratulations! Congratulations, Lai Meng. Are you still here? I think he's been quite active throughout the session. Thank you for staying with us. Yeah, I guess all the winners are here. Thank you so much. I think that should sum up the session for today. And thank you so much for attending today's live stream. And also, I hope you found this session really informative and insightful. And I hope you can apply the knowledge you learned on your trading. Yeah. Again, if you download our M Plus Global apps within this month, you can get and deposit a minimum of 10k ringgit, and you can entitled to a gift of 5 Grab share, and also a 90 days 90 days free level 1 price quote for US and also Hong Kong stock market. So it's really worth it, guys. So remember to grab the opportunity because the live quote is really important for trading. Yes. And thank you for your attention and also all the questions and all the comments. And we will have our live stream every weekday from 9 to 11 a.m. and also 7 to 9 p.m. So I guess that's some of the session today. And happy holiday to all of you. And Selamat Hari Raya and good night. Thank you.